Are you getting interested in what is going on with insurance? This is something we've been talking about for
Drum roll.
years at this point when it comes to it. The commercial insurance line on Uber and Lyft can get absolutely ridiculous. That eats into the fare. Because again, you always look at it and say, what did the passenger pay? What did I make? I don't care about anything beyond that. I want to know what the passenger paid and what I make. And Uber went blue in the face. Y'all know who I'm talking about. That was talking to both of us. It went blue in the face. Oh, this is a commercial insurance line item. It's getting ridiculous. Yeah, okay. Well, sure. But problem with that is what happens when a company decides to go into looking into the insurance and what is going on, like Consumer Watchdog.
Class is in session, folks. Pay attention. So Consumer Watchdog came out with this 17-page report. Okay? To save you all the headache of reading the 17 pages, I read it. And breaking news, on June 9th, Consumer Reports, to talk about this more in detail, because we can't do justice 17 pages of it in 2 minutes.
You mean Consumer Watchdog?
Yeah, the Consumer Watchdog, sorry. Consumer Watchdog is going to be on Show Me the Money Club on June 9th. So please come back for that to listen from the horse's mouth of what they have uncovered. We have been talking about this literally, and all of you have been saying, look at the commercial insurance on this trip. Look, $50 in LA, especially in LA. In California and in Florida, the rates, Uber kept saying, the rates are through the roof. Our take rate has never changed, Chris. Is that a fact, Chris? Have they said that a million times to us?
Mm-hmm.
Our take rate has not changed. It's still 18, 20%, but commercial insurance rates have gone through the roof. Well, this outfit alleges and came out with this article on the left with the picture on it. Uber's license to kill insurance scam. How Uber is limiting its liability to raid its insurance reserves and fund robotaxis. To get my thoughts together, I wrote what my thoughts are. I'm going to read those to you guys for a couple of minutes. But the basic scheme starts at the top of the diagram. So you guys look at the circles. There is like notes within the circles. Weak background checks. It starts there. The process starts there, which we did the CBS interview actually last week. It came out. You guys should have watched it. How you can get on Uber with fake documentation. Weak background checks allow Uber to flood the zone with spotty drivers. It starts there. Then it goes, drives down driver pay. Agree. Supply, more supply, equal demand, prices go down. Then it goes into the bubble, boosts Uber operating cash flow. Absolutely. Their take rates go up, right? Okay. Then comes the corporate shenanigans, according to Consumer Watchdog. Pass through as excess insurance reserves to avoid taxes. Then it goes into later reclaimed as unrestricted cash to flow to accelerate AV acquisition and Delivery Hero for another 11 billion, right? And then it goes speeds putting drivers, good and bad, out of business. Okay? I read the whole 17 pages for you guys. But then again, as I said, June 9th, Consumer Watchdog is going to be on the show. Jamie Court is going to be on the show. And we're going to talk about this topic and a couple other topics with Jamie. So these are my thoughts. I wrote them down so that I don't have to blubber too long. The advocacy group, Consumer Watchdog, released a major report pulling back the curtain on what it characterizes as a massive, deceptive financial scheme by Uber involving its insurance structure. The report, titled How Uber is Limiting Its Liability to Raid Its Insurance Reserves and Fund Robotaxis, accuses the company of excessive insurance costs while secretly building a massive war chest to fund autonomous vehicles. 1. The captive insurance loophole. While Uber publicly claims that rising commercial insurance premiums, as they have told publicly everywhere, are hurting its business, Consumer Watchdog revealed that Uber actually self-funds, self-insures nearly 95% of its own risk. There's a shell company that's created. Uber executives created a wholly owned private subsidiary in Hawaii called Aleka Insurance Inc. Because Aleka is a private captive insurer, Uber has been able to funnel passenger fares into it, avoiding standard corporate taxes by labeling the money as insurance liability. So those are the ones that you see on the earnings report. When I go listen to it every quarter, it's insurance reserves. Explosive growth. Uber's self-funded insurance reserves skyrocketed by nearly 100% in just 2 years, ballooning from 6.7 billion to 12.46 billion. According to the report, these reserves grew as fast as the actual number of rides taken. Number two, misleading the legislator. The report highlights that Uber's top public policy executives actively misrepresented these costs to lawmakers. For instance, Uber claimed to California legislator for SB 371 to lower the liability rates on UI and uninsured motorist and underinsured motorist, legislator that 45% of every fare goes straight to government-mandated insurance. In reality, Uber was setting its own high insurance rates and paying itself through its subsidiary to hoard the cash. The end game. The watchdog group, Consumer Watchdog, alleges that this entire setup is designed to fund Uber's autonomous vehicle rollout. Uber has already committed $10 billion to purchasing robotaxis, to freely use the $12.46 billion insurance stash as unrestricted cash to buy autonomous cars, strip accident victims of their rights to recover damages through SB 371, which they passed, limit product liability lawsuits, making it harder to sue for faulty robotaxi software and vehicle defects, block injured victims from finding contingency lawyers by making, and that's the new one that they're spending $20 million on in Sacramento, block injured victims from fighting contingency lawyers by making vehicle accident lawsuits financially unviable for attorneys. The watchdog verdict. Consumer Watchdog warns that giving a company known for a move fast and break things philosophy a multi-billion-dollar shield against legal accountability right as it deploys thousands of untested autonomous robotaxis poses a severe threat to public safety. So what I'm saying is short and sweet. We've been talking about this, and we couldn't believe our eyes that I see all these receipts, all these trip receipts in California and all over the country, and not in every state, but in specifically California, Florida, and a couple of other high insurance states. Uber was saying, we are not taking a penny of this money. All along, they're funneling the money into not paying the taxes on that cash flow, creating the loopholing it through that company called Aleka, bringing it back onto the balance sheet as pure cash so they could invest in robotaxis, and they bought Black Lane for a few $100 million, the private chauffeur company. Now they're going after Delivery Hero for another $11 billion. That's how the loophole is working. This is not me saying this. This is Consumer Watchdog is saying this, but it kind of rhymes with what we've been seeing over the last 3 years. When I see a trip in LA going from West Hollywood to Disneyland, which is a 45-mile trip, originally there was a cap of $10 for commercial insurance, Chris, as you know. Then it went to 20, then it went to 30, then it went to 50 for a single trip commercial insurance. I was not buying that. And I kept saying to Uber, this is bullshit. You guys are doing some shit with the money. Well, now that's coming out that all they were doing is they were increasing the insurance reserves on their books in order to fund all these purchases. They will be on Show Me the Money on June 9th. And I can't wait for that interview, actually.
One thing I always say is work smarter, not harder. If you aren't using the Solo app, then you may be working harder. So let's change that. Download the app, link your accounts where you can manage your income, track your expenses, and project your taxes. Not only that, but you can plan by optimizing your time, make more, and even guarantee your daily pay with guaranteed earnings. Download Solo and begin to work smarter, not harder today. Link is in the description. All right, let's get back to it.
Yeah. Quite interesting. So you could go check out that article, just do research on or Google search on that, and you can check out what it was that was said. Because yeah, there's quite a bit in there. So either way, it should make for an interesting show. That'll be in 2 weeks. So make sure you are putting your calendar for that, so you can come back and see what they have to say when it comes to some of the information that they have found and are alleging.
The story goes a lot deeper that I couldn't mention because we're out of time. But what it does is there is actually Uber execs involved in pulling the wool over the California legislator's eye. And Uber so far has paid a husband of one of their actual employees who is in charge of public affairs, who runs a consulting company close to $10 million actually already to run the scheme, number one. Number two, they just appointed Jill Hazelbaker to probably number 3 or 4 at Uber. She got bonuses. David West got bonuses because they worked on SB 371 to lower the liability. My question to the Consumer Watchdog is going to be, I understand the safety issues regarding autonomous vehicles, but what happens to the driver? Because if they lowered the uninsured motorist or underinsured motorist liability, which they did by SB 371, are you on the hook as a driver, right? Because you get in a crash with somebody who is underinsured and there's injuries, can the rider now come after you for what you have? And I think there's a high likelihood of that because it's not going to be enough to pay their medical bills. And this new law, it's in the ballot actually this year, that they're trying to pass is to limit contingency fees by lawyers who will not. But they're making it sound like Uber's making it sound like it's a benefit to the consumer. They're going to keep more of the money. We only want the lawyers to get 25% or 20% of the lawsuit settlements. Well, not too many lawyers are going to work for that, and then they're making it look like or selling it like it's advantageous for the consumer. But we're going to all talk about this in a couple of weeks with Consumer Watchdog. Well, thank you for coming on, actually, Jamie. And this is something I wanted to dig into for a while, and here it is. Here's our chance.
All right, thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself, Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.